Hi, welcome back. There is turmoil across the global markets. US President Donald Trump has described the fall in the US markets as a long-awaited correction and described the move by the Federal Bank to raise interest rates as crazy. Not mincing words there. CNBC's Jeff Cutmore caught up with Christine Lagarde to ask her if she really thinks on the same lines as President Trump. Listen in.
I wouldn't associate Jay Powell with craziness, no. No, he's a very, he comes across, and members of his board, as extremely serious, solid, and certainly keen to base their decisions on actual information and a desire to communicate that properly. That's what I have observed.
I mean, the astonishing thing is, if this was President Erdogan in Turkey, we would all be throwing our arms up and saying, how can you interfere with central bank policy making and independence? But apparently it's okay for a former casino and property builder to weigh in on the actions of the Federal Reserve right now.
You know, all over the world, it is certainly a good principle to have independence of the central banks and of the central bank governor. Certainly we have advocated that in all countries, and I think that the Fed is no exception.
Let's move on, because I don't think I want to spend too much time on this issue. The markets will make their own judgment. But clearly the markets overnight were a little bit rocky. I wonder, is the IMF in part responsible for the sell-off by putting out such a downbeat forecast around growth expectations? You know, back in June, we all thought we're going to bowl along at 3.9%. Now we're suddenly 3.7%, and we're seeing other economies being downgraded. Do you think you can take some responsibility for the risk-off that we saw overnight?
I doubt that very, very much. And you know, I don't comment on daily volatility of markets here or there. Markets go up and they go down. And you know, when we do a forecast, we do that taking into account all the policies that are confirmed, all the decisions that are made, and also trying to assess the confidence impact that some of those decisions are making. And it is a fact that the trade tensions that we are seeing, the trade, particularly the tariff decisions that have been made, are having an impact and are clearly eroding confidence in many corners of the world. We are seeing the beginning of it. And that's the reason why. It's not the only reason. There are other reasons as well. Some, you know, the country most affected by our downgrade is Iran, because of the, you know, incoming sanctions. So our forecasts, I think, are completely legitimate in that respect, and they're not downbeat. You know, 3.7. It's nothing to be ashamed of. It could be higher. And personally, I would certainly wish that we take all the right policies in order to have more growth. So de-escalating the trade tensions, sitting around the table, addressing the issues that the system has, and proposing new terms and a new legal framework within which trade operators, companies, the enterprises, the SMEs, the big corporates can trade and can expect the terms of trade is, in my view, an imperative if we want to continue to see growth.
We're heading down a very difficult road. We've got a trifecta of difficult issues here: higher interest rates, higher dollar funding costs for the emerging world, high oil prices at the moment, and of course the backdrop of pressure on emerging markets is raising concern because of the trade issue at this point. Are we at the point of no return? If we were to get a very quick deal between the United States and China, is it still possible to prevent the loss of confidence that we are beginning to see at a corporate level that is affecting investment decisions? Is there time to turn back?
There's always time to turn back. You look at the anxiety around the NAFTA succession, and how operators have been actually really satisfied to see certainty as opposed to uncertainty. You know, the USMCA is now the proposed deal. They know where and how they can operate. They understand the constraints. They understand, you know, the benefits to be had. And if the same could apply in terms of international trade and how the parties will actually organize the process of negotiations. I'm not naive. I've been a Secretary of Trade for France. Trade agreements take much more time than trade disagreements. But agreeing on a process and accepting to go along a path of negotiations and of identifying the problems that are on the table, I think would go a long way into reassuring operators, enterprises and large corporates. Yes, I do.